Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 21st of May, 2020. Thanks for showing up here again. It is episode number 1760. A reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning the market sentiment overall is to slightly bent to risk allocation. Yesterday ended up accomplishing what was expected, which is to push higher into the 70s, 2970s. Fait accompli, as they say in French. And today we're coming off a little bit and moving back into the 3-day bounce now. Hang on one second. This morning, DAX is the laggard, down 1.22%. The DAX is down 137 points, trading at 11,110. Euro stocks following suit as often it does. And gold is off. It's trading at 1737. It's big. Over the weekend, people were just blogs and blogs talking about how gold's finally going to break out and really going to just smash through the 1800. And here we are Thursday, nothing's happened there. It's still hovering around 1737, not knowing what to do. So that's where we stand. The Dow is down 80 points. The S&P is down 9.5 points, and the Nasdaq's down 19.5 points. So these are, well within kind of a couple of rotations. Really nothing serious. The leader today is crude, again up 2.33%. Crude is in a crucial area right here at 34. There's a lot going on in this area right here with crude. It's got a big stock zone at 34.46, which it tagged this morning and has been hovering in this zone. If you're trading crude, this is a very important battle zone right here. So that's where we stand this morning. Bonds are up 14 ticks. In terms of releases, we did get the initial claims, U.S. initial claims this morning, expected a 2.4 million consensus forecast for 2.29 million. Came in at 2.48 million, slightly worse than expected. The 4-week average coming in at 3.042 versus 3.073, so that's pretty decent. Philly Fed also came in, the consensus was negative 41.5, and the forecast was negative 50, with the actual coming in at negative 43.1. Looking forward, we do have market manufacturing PMI for May, 15 minutes after the open, expecting 39 for manufacturing, 32 for services, and 32.5 for composite. At 10 o'clock Eastern, we're looking for existing home sales. And then we have Fed Parade today at 10. We have Fed's Williams at 1 p.m. Eastern. We're looking for Fed's Clarita. And at 2:30 p.m., we're looking for Fed Chair Powell. And then at 2:30 also, we're looking for Fed's Brainard. This evening, we get the inflation rate out of Japan at 7:30. So that's where we stand. Now let's take a look at what was expected yesterday versus what we actually got. In our review segment, so here's where we stand in our review. The primary scenario was we're opening in range, in value. Expected the market to drop into the prior point of control somewhere around the 29.48, and then was looking for it to turn up and tackle the 29.78 and potentially push to 84. That's the primary scenario. The secondary is a pushes higher and it takes out these two highs of 58 and 64 and then falls back in which case I was looking for it to push down to 29.20. the MC point of control in this area. Secondary, of course, did not happen. The primary on a 4-tick Renko to fit the entire chart nicely like this tells us that there wasn't all that much action yesterday. We got an open auction as expected, and it finally broke through, pulled back to mid VWAP and the opening swing. This was actually the main clean setup. Fortunately, I was looking the other way, pulling back, the short pulling back into this area, and then we get our first impulse for the day, bona fide impulse for the day. And we have a nice little zipper flag, and then we break the initial balance and push to 75.75, leaving the 78 target above us untouched when it fell back in the range. We had a normal day yesterday, and if we look at the profile, zoom out, and by the way, we're in the gap zone from March 6th, believe it or not. So, we've taken back a lot of this pandemic loss. What we ended up with yesterday is a normal distribution session, really. I know it looks like there are 3 distributions up here with a major one in the middle and one down below. We do have a clear neckline of 56.5 and 72. And we have a value area that is valid between 70 and 58.5, and the market's currently trading at 59.75. So we are likely to open in range in value. It is Thursday. Tomorrow is the last day before the holiday. Monday is Memorial Day here in the United States and is a holiday. It's the beginning of summer, and tomorrow is expected to be quite boring after the first hour and a half or so. Which it traditionally is for this holiday. People it's supposed to be the time of year where you're supposed to, launch your boat into the lake and hang out there all weekend to kick off the summer. Pools open here in Chicago in the high rises and so on and so forth. I will be traveling tomorrow. I'll be here for the Trader Bite, but I'll be traveling tomorrow back to Chicago. So we're opening in we finished up in a very, very even distribution. The market is basically finding balance up here at 29.68 from 70 to 60 to 70. And so overall, I didn't know Europe was closed today. I didn't observe that in my calendar. Should have noted that. Anyway, we have a normal distribution. Let's look at that from a different angle here. Let's turn off some of these lines. Let's clean up these charts. Boom. And well, yeah, let's look at the profiles. Okay, so what we have here is a market that has gapped quite a bit, right? 2 days ago or Monday, 3 days ago, and has pushed up pretty decent. The next day it opened below and squeezed into close to where the prior day was and ended up weak with a neutral extreme down. And then we had a gap up yesterday, which tested above and is accepting these prices. So these 3 days represent a market that is really actively discovering up, as I talked about yesterday, and this is why I expected it to push towards the 78 and 84 yesterday. I was looking for the long side being the better play, as I described in detail. But what it has done is it has shifted the value area up. It has shifted the point of control up. And it has put in a higher low and higher high, but it's accepting balance. And so today is a day where the market really needs to pick a side and take that into the holiday weekend. We've made we've made good progress pushing. Squeezing the shorts out, squeezing the shorts out, but we are taking pause here. Yesterday did not have an active price discovery profile like the prior days. You can see the prior days, just a very, very active price discovery. This day is saying, okay, all right, we're accepting these prices. The volume was really good, 1.18 million. And so what we have is a market that may have found its sellers for now. And so it is likely to balance with a skew to the downside as it falls back into the prior range. That is a stark difference from yesterday, what I talked about yesterday. But the fact is, we have a nicely formed profile yesterday, a clear consensus and good balance. And what that's likely to do is to bring us back into line. The key area to test below is what? 29.48. 29.48 in the overnight session pushed to 29.41, kind of an early indication that it's really done on the upside. It does look like it has found some sellers yesterday, and it's likely to face resistance on the way up and potentially move down, and that's my bias this morning. Okay, looking at the order flow, let's shift gears here. Looking at the order flow on CT Bookmap, you can find us at ctbookmap.pro. Very important tool. This is what I execute on currently. It's a pretty messy overnight session. The overall trade in the overnight session is kind of a mishmash and a push and pull. And again, it's telling us that there's a potential here that we found the sellers we've been seeking. Let me shift this out so that yesterday's action is not in here, so we can get the better contrast. All right. Okay, so you could see that it's kind of drifted down and held sideways for most of the. It's moved down in the Asian session and held sideways through most of the European session with a pop higher on the initial claims right here. And you can see some liquidity coming in, but it's coming in kind of late. The resting liquidity is far higher, closer to yesterday's high. And overall, there's not much that the order flow is showing us today. I think that what the market is saying here, based on what I'm reading, is it's a wait and see. There aren't some big positions waiting to work, which are working exits. We have 29.80 above, 29.77 as big areas above with resting orders, and then below we have 39 and 35, and we're stuck in the middle. There's not much. This is one of those days that's indicating, in my opinion, that there's little direction, that there's likely to be a two-way fight coming into today's auction. Here's the overnight session. We open up and we immediately tumble. From balance. We move right to yesterday's low and below, and then we remain below VWAP and mid for most of the session until the initial claims number came out. And so what we have in the overnight session is more of a long liquidation profile. A lot of the volumes occurring below the mid, below yesterday's close inventory. The overnight inventory looks mostly short, and we're coming into today's session that way. So knowing this, what do we expect for today? Let's take a look at what's expected for today's session.
On pushes prime day to September.
As I set up today's chart here, give me a second. All right, so my computer's really having a hard time keeping up. I ordered new memory for it, going to take it up to 64 gigs of RAM just to be able to handle everything I'm throwing at it. It's a laptop. Um, so we're opening on the edge. We're opening in range. That's clear. Yesterday's range. We're opening below the close. So inventory looks short. And then we're opening just at value. And the expectation is for responsive buying back into the point of control. I expect this to falter. And I'm looking for an impulse down and for it to move towards that 5150, consolidate here for a little bit and start to seek lower. I'm expecting it to get tangled in the 2948 area, the overnight point of control and the MC point of control, this black line, which represents the highest volume on the composite. These are magnets, and they're likely to hold us here before we pop through the overnight low and then bounce up into the close. Looking at the calendar for Friday, there's not much there. Really surprised the calendar doesn't have today as a holiday for Europe, so I completely missed that. But tomorrow, there's not much out of the U.S. There's really nothing out of the U.S. Tomorrow's calendar only shows retail sales out of Great Britain, the ECB monetary policy meeting accounts, and the retail sales out of Canada. So there's nothing, not much there. So I suspect that a lot is going to, a lot of people are likely not to be here for tomorrow. So anticipate that into today's close. It's likely to be noisy. The secondary is initiative selling that moves us into the overnight point of control, moves us into the MC point of control of this area, the combined volume of this area, and then we're looking for it to move up as it fails to garner more support on the sell side, and now it's free to shift up. And we're looking at testing the other side of the range, so back up to 73.50 and potentially poking through that 75 before resting in the range. I expect today to close in the range somewhere. I expect it to draw the point of control down. I expect it to draw the point of control down and start the one-time framing lower into tomorrow. So I expect a lower high, lower low today. But again, please don't mistake that with having a strong bias. Excuse me, having a strong bias coming into the market. These are my expectations, just like if we're going into battle or if we're executing a warrant or if we are going on a trip. We have a plan, but we will respond to the conditions on the ground. Museums may be closed, archaeological sites might be closed or whatever, and we can adapt. But the goal is to come in with some sort of a plan and an expectation. And what that does is the expectation helps us frame where we are versus what was expected if we follow the simple rules of auction theory, of how the market auctions. This is important information, but if I come in with a blank slate and don't know what to expect, there's no frame of reference for me to say, look at that. It is failing to respond. It is failing to respond. And so it's not moving up. It's failing to respond up. So I'm going to sell, 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 sell. And if I do, I'm looking for that point of control right here. The point of control at 29.4850. I'm looking for the overnight low for the overnight stat. And on an extended basis, I'm looking for the low of Tuesday as the next key area to test, 29.32. But the big area to check out is 29.20. This is an even bigger MC point of control and a lot of confluence at 29.20. So if we do sell off, and it keeps pushing and breaking through these levels, I'm going to add on pops higher, and I'm going to look to hold to the next level. When it breaks through the next level and it pulls up, I'm going to add there, and always adding smaller than what we already have in the position. And I'm looking for the next level down and so on and so forth. That's why we come in with a plan. Good luck today, and I'll catch you tomorrow. Take care.